Hi, this is Tom Essaye from Money and Markets TV. Last Friday's release of the May employment report was a huge disappointment. It caused the markets to tank, and the Dow and NASDAQ gave up all of their 2012 gains. But the stock market's loss was gold's gain. It surged as traders assumed that the weak jobs number means a higher probability of additional quantitative easing from the Fed and other global central banks, and more QE will stoke inflation in assets such as gold. As a contrarian investor, though, I always try to look beyond the obvious winners. I want to find the not-so-obvious winners, and I think I've found them in gold mining stocks, which may actually be bigger beneficiaries than gold bullion. Now, I know you might be thinking that gold miners are one of the most frustrating sectors of the market. Based on my years of experience trading them, I would agree with you, and up until a few weeks ago, that would have been true. But in mid-May, as gold made a bottom around the 1530 level, mining stocks started rising, despite a falling stock market, something that rarely happens. The reason for the rally wasn't totally clear, but I believe gold stocks simply got too cheap. Many were trading at or below book value, which is a rock bottom valuation. As a contrarian investor, you have to realize that everything has a value at some point. And quite simply, gold mining stocks reached that point. Normally, it would take more than this kind of technical bounce to get me so bullish. But if we step back and look at the landscape for miners, we can see that there is a possibility for substantial gains. First of all, we've seen fuel costs fall hard. As they do, gold miners' margins rise because it becomes less expensive for them to extract and transport the gold. Second, with the creation of the SPDR Gold Trust ETF and other funds, gold companies have had to become better stewards of corporate capital. As such, some major gold miners have started paying dividends and adopting other shareholder-friendly measures. So while gold will certainly benefit from any additional easing or QE from the Fed or other central banks, I think the time could be right to look to gold mining companies as well, because they could provide an even greater return. One idea you might want to consider is the Market Vectors Gold Mining ETF, symbol GDX. But if you want to shoot for really big gains, consider stocks in the miners that Wall Street isn't watching. I'm looking to scoop up a few of them on a pullback for my $1 million contrarian portfolio. I'm Tom Essaye from Money and Markets TV, and thanks for watching.